We've all seen the absolute explosion of AI news, right? It's been everywhere. But what happens when the money, the real money driving the hype, starts to get a little nervous? Well, that's the big question we're digging into today. Is Wall Street's love affair with AI starting to fizzle out?
I mean, seriously, after months and months of just non-stop hype and stock prices that seem to only go up, are we finally seeing the end of the honeymoon phase? It's a question that has suddenly popped up on everyone's radar.
And the reason we're even having this conversation is because of some pretty serious turbulence in the market. A really rough week for tech stocks has kind of rattled the financial world, and it's making a lot of people wonder if the AI bubble is finally starting to lose some air.
So, to really get what's going on, let's first look at the big picture, this sudden and pretty significant downturn.
This is the number that really got everyone's attention, a 3% drop for the Nasdaq Composite Index in just 1 week. Now, in the world of high-stakes investing, that's not just a little dip. That's a huge red flag.
And to put that 3% drop into perspective for you, this was the Nasdaq's worst single week since that big tariff plan was announced way back in April. So we're not talking about a minor wobble here. This was a significant, headline-making slide. Okay, but the story gets even clearer when we zoom in. Let's move from the overall market to the specific companies that are right at the heart of this whole AI boom. How did they do?
Well, what's so striking here is just how targeted this downturn felt. The companies that you most associate with the AI revolution, they were some of the hardest hit. I mean, look at this. Palantir, down a staggering 11%. Oracle, down 9%. And even the undisputed king of AI chips, Nvidia, took a 7% hit. This wasn't random.
And get this, it wasn't just the pure-play AI companies. Even the absolute titans, Meta and Microsoft, companies that have publicly promised to spend billions and billions more on AI, they weren't safe either. They both dropped around 4%. So that suggests this wasn't about one company's bad news, but a much broader feeling about the entire AI sector.
So, okay, we've seen the what, a pretty big drop in AI stocks. Now let's get to the really important part, the why. What's the theory behind this sudden chill in the air?
This is really the key question, isn't it? Is this drop happening because AI is failing to deliver on its promises? Or is there a totally different force at play here?
Well, according to Jack Ablin over at Crescent Capital, the problem isn't bad news. The problem is that expectations have been set so incredibly high that even good news isn't good enough anymore. These stocks have been priced for absolute perfection, and anything less than that is going to trigger a sell-off.
And this gets to the core idea of stretched valuations. Think of it like this. It's when the hype-fueled stock price gets stretched so far ahead of the company's actual financial reality that it's like a rubber band pulled way too tight. The price today is already factoring in years of flawless success in the future. It leaves absolutely zero room for error.
It's also really important to remember that none of this is happening in a vacuum, right? This AI stock slide is just one piece of a much larger economic puzzle.
And you can see that so clearly right here. While the tech-heavy Nasdaq fell that big 3%, you can see the broader markets, like the S&P 500 and the Dow Jones, had much smaller declines. This basically confirms that while the whole market was feeling some pressure, the tech and AI sectors were feeling it the most.
And that pressure is coming from everywhere. You've got an ongoing government shutdown creating uncertainty, consumer sentiment is trending down, and we're seeing layoffs across a ton of industries. All of this just creates a nervous environment where investors are way quicker to sell off their riskiest, highest-flying stocks.
Okay, so let's bring it all home. What's the final verdict on that question we started with? Is Wall Street actually losing faith, or is this just a little market froth getting skimmed off the top?
So what does it all mean? Well, it really doesn't seem to be a fundamental loss of faith in the long-term future of AI. It feels much more like a painful but probably necessary reality check. The market is just recalibrating its massive short-term expectations for technology that, let's be honest, is still figuring itself out.
And that leaves us with this one big question to think about. Are we just watching a temporary, maybe even healthy correction for an overheated market, or is this slide the first real sign of the true, volatile cost of betting so big, so early on such sky-high ambition? I guess only time will tell.